Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we talk everything about the stock markets, the opening action, and what kind of a trade can you expect as we start off another week. Well, after two consecutive weeks of slowdown, of weakness on the stock markets, a whole lot of choppiness and volatility, what do the stock markets really have in store for you and for your investments? We've started lower yet again on the back of weak global cues. Remember that the US markets on Friday overnight session had actually closed on the lower side again with some of the escalating tensions between the Ukraine and Russia. The Asian markets, however, after this over 2 days of gap, have opened kind of slightly lower with a mixed trend, and that was on the back of some of the concerns really easing. The French government coming in with the Russian government to talk about how de-escalation can further really happen. So all of those developments are definitely keeping the stock markets on toes and on the edge right now. As far as the Indian markets are concerned, we have seen a lower opening in today's trading session. Talk about the Sensex, it was down to 28 odd points or 0.4% lower at 57,604 at the open today. And the Nifty was down 77 odd points or 0.4% down as well at 17,198. So the crucial part is that 17,200 was breached on the downside right at the opening level. Of course, there was some bit of choppiness right after the opening tick too. About 727 shares are seen advancing. However, there are 1476 shares that have declined in the early action, and 131 shares remain unchanged. In terms of stocks, which are the stocks that are shining and which are the ones that are not? Dr. Reddy's, NTPC, TCS, Power Grid, and IndusInd Bank among the major gainers on the Nifty this morning. Talk about the losers. It's Hero Motocorp, Coal India, HDFC Life, Tata Consumer Products, Wipro, all of them declining in the early action as well. Now, what are most of the experts really talking about? What should be in focus in this entire week, and how will the Nifty be trading going forward from here? So experts do believe that the Nifty remains in a medium term uptrend, while the short term of consolidation is quite expected. The trading range most of the experts and technical experts see for the Nifty is 17,100 to 17,550. For the February series, there is going to be a limited upside, they say. Also, with the reversal confirmation seen only above 17,550, which means that till the time Nifty remains below that, there could be a volatile range. There could be some lower actions as well. Mixed activity seen across the sectors. Experts do believe stock specific activity will be definitely tracked going forward from here. Value is seen in some of the FMCG stocks and BFSI stocks, and pharma is expected to underperform as per most of the experts as well. Now, a whole lot of focus today will be on specific stocks like Federal Bank is in focus. The company subsidiary, Fed Bank Financial Services, has filed preliminary papers with SEBI to raise funds via an IPO. Telecom stocks again will be in focus. The sector's revenue growth is likely to be more than double to nearly 10% sequentially in the March quarter of FY22, when the full beneficial impact of the sharp tariff hikes of the last November hits home, as per some of the reports. Apart from this, Equitas Small Finance Bank will be in focus. The bank will receive 550 crore rupees from qualified institutional investors or QIIs, as it has approved an allotment of 10.26 crore equity shares at the issue price of about 53.59 rupees per share. Apart from this, of course, shares of some of the state-owned banks or the PSU banks will be in focus. There have been some reports, media reports, that the RBI has asked 5 banks to list their zero-coupon government bonds issued in lieu of the equity at a fair value as well. Keep that whole space in your radar as well. Now, as per the brokerage houses are concerned, some of the reports have come on specific stocks as well. Like Citi has downgraded rating on the shares of Ambuja Cement, while CLSA says NTPC, and Goldman Sachs says, you should buy Paytm as well. Look at what Goldman Sachs says on Paytm first. Now, Paytm stock is pricing in significant regulatory competition and execution headwinds while trading at a 15% discount to the global fintech peers right now, according to Goldman Sachs. The brokerage firm has maintained a buy rating on the stock as well. You may see some support because most of these new age technology stocks were not faring quite well in the previous week. Now, CLSA on NTPC has come out with its report. The brokerage house sees NTPC as a clear play on India's entry into the global green hydrogen market. Remember, the policy is in talks right now. There is a lot of buzz around that space. So CLSA has retained a buy call on NTPC shares. Jefferies has come out with a report on Ambuja Cement. The brokerage house has cut the calendar year 2023 EBITDA estimate by 11 to 13% to reflect the cost increases. Now, Jefferies has a buy call on Ambuja stock as well. So, all three buy calls as far as the brokerage house are concerned. But most of the experts now do believe that while most of the Q3 earnings are now behind us, with Q3 behind us, the focus is largely going to be on the macro data and how the geopolitical tensions really pan out to be able to give us a clear picture as to how the Indian stock markets will continue from here on. Most of the experts do believe that stock specific move will definitely be in focus. So one should remain low key in a wait and watch situation and not burn their fingers in this highly volatile scenario till the time the picture gets more clear from here on. We'll keep you posted with everything that's developing on the world of stock markets. So do stay tuned. On to business today. You should subscribe to our YouTube channel so that you don't miss out on any video that we put out for you, to watch out for any big news that comes on the stock markets that may have an impact on your wallet and on your investments. Thanks a lot for tuning in. For now.